subject is quite broad for the members. And today we're only speaking about trade in the era of AI. And we'll also be talking about the other subtopics in our series that will be coming over during the year. So over to you, David, for your presentation. Thank you.
Right. Thank you very much, Mary, for the kind introduction, and thanks again to ICC Kenya for the kind invitation to speak to you all today. Good afternoon, everybody. Thank you very much for tuning in. So my subject today is going to be all about the business of trade finance, which inevitably will also overlap a little bit into the world of supply chain finance. But to begin with, I will talk a little bit about the business context, what's driving change in the market, and then I'll go on to talk about technology and the relationship between the two, trade and technology, which I think have become almost inextricably linked in recent years, and even more so as we witness the drive towards digitalization and sustainability. And as you can see here, I have entitled this presentation as Trade Finance in the Age of AI, ESG, and DLT. So capturing what I believe are three of the themes which have been making headline news and hence garnering the most attention in today's market. Okay, so let me get rid of the pictures on the right so I can see my own slide. So first of all, turning to those key trends and issues I referenced just now, I've actually been using this slide or some variation of it, I would think, for more than 10 years now. And I don't think the headline drivers have really changed that much during that time, although my overall observation would be that the emphasis has shifted away somewhat from the rather negative side of the agenda, which is all tied up with regulation and compliance, towards a more positive outlook geared towards taking advantage of the developments in new digital technologies. So on the regulatory compliance side, in the wake of the financial crisis, we witnessed the unintended consequences of Basel III, which of course had a punitive effect on the business of trade finance and made it essentially a less attractive business to be in. So this led to the development of new operating models in both risk and finance. On the risk side, we've seen the ongoing development of a brand new market in risk distribution, whereby banks have made their trade assets available to third-party investors in capital markets. And on the financing side, we've seen the ongoing migration away from traditional trade instruments like letters of credit in favor of trading on open account and fueling demand for supply chain finance. But of course, in more recent years, the agenda has been dominated more and more by developments in digital technologies, which we'll elaborate more on during the course of the presentation. And finally, globalization, which has seen the emergence of new trading relationships, as well as new competitors entering the marketplace. But also in the wake of the pandemic, there is more and more the desire to build back better to create a sustainable future for us all. So just briefly summing all that up, really, the drivers down the left-hand side, digitalization leading to paperless trade, new models in risk and financing, as I mentioned, the displacement of traditional trading relationships, and an increased focus on sustainability all adds up to an increased demand for the transformation of manual processes, the use of AI to reduce risk, leveraging the full power of the trade ecosystem, all of which points towards a series of investment priorities for the banks, including AI, data analytics, risk distribution, open API, supply chain finance, digitalization, and sustainability. And it's these two words, digitalization and sustainability, which more and more dominate today's agenda, as confirmed by these statistics taken from a recent report published by Eastern Partners. And these are two themes which I consider to be interdependent, since in my view, we will not succeed in fulfilling our goals on sustainability and the environment unless we learn to take advantage of the power of digital technologies. So what are those technologies? It's become a popular phrase that paper is the Achilles heel of trade. So how do we reduce cost? How do we make processing more efficient? And at the same time, how do we move towards a more sustainable future? And it's obvious that we have to reduce and eventually eliminate, as far as possible, the use of paper in traditional trade finance. And so, therefore, we need to make it legally as well as technically possible to exchange trade documents in paperless form. Artificial intelligence in its various forms, including the use of machine learning and natural language processing, is another key cornerstone towards reducing cost and increasing efficiency. Smart objects, the use of track and trace can help us reduce operational risk, and API-based open banking is an essential part of the integration process and leveraging the trade ecosystem. And I'll come back to these subjects, as well as that of DLT, through the following slides. So first of all, artificial intelligence. It's one of those subjects, as I said, making headline news. And AI is potentially the one technology that alone can revolutionize our daily lives, not only in the world of trade finance, but in just about everything we do. Of course, there are ongoing debates regarding the degree to which we should, from a, I suppose you'd call it, morality perspective, empower computers or robotics to take decisions for us. And controls can be put in place to manage that, ensuring human interventions can be introduced into the process if and when required. But it is technically possible today to capture data through a front office portal using well-established OCR techniques, and then apply very detailed compliance checks in the back office using a combination of AI, ML, and NLP. And since the processing of paper documents is the main contributor to cost as well as inefficiency, the application of AI stands to be a real game changer for the business of trade finance. The next one is track and trace, smart objects, the Internet of everything, as I call it. Banks often tell me that they know how to manage credit risk, but managing operational risk presents a different kind of challenge. So using track and trace, we can position a smart object inside a container. We can track the movement of goods from origin to source. So we can see, in the worst case scenario, I suppose we can see whether a vessel has actually sunk, or it has been diverted to a watch-listed port, which can also be problematic. We can see whether a container, an individual container, has been lost or damaged. We can see whether perishable goods are being stored in the required conditions at the right temperature, and so on. And what I eventually think is even more interesting, potentially, is the opportunity to apply this same technology to guarantee the provenance of goods at source in support of sustainable trade. And speaking of sustainability, the next one is ESG. So interest in ESG has grown substantially in the wake of the pandemic. And it is inevitable that ESG compliance will eventually become the subject of mandatory regulation. But today, it is already technically possible to perform compliance checks against a comprehensive range of ESG criteria, including the United Nations Sustainable Development Goals, the SDGs, the EU taxonomy regulations, the Sustainable Finance Disclosure regulations, as well as performing checks on greenhouse gas emissions, or any adverse news that may have been published regarding the actions of an individual trading counterparty. And all of this can be put together to generate an E score, an S score, and a G score, as well as an overall composite score across the piece. And these scores can be fed into the bank's back office processing systems to support the internal financial analysis processes, which may ultimately determine whether a transaction can be financed or not, and if so, at what price. Okay, so now, this next subject is a rather more controversial one, and I'm well aware that there are those who may disagree with me. There may be those who strongly disagree with me. And so I would emphasize that these are my own personal views and observations. And we are, of course, talking about distributed ledger technology, DLT, otherwise known as blockchain, which can be a rather emotive subject for some. So I suppose everyone will be familiar by now with what is known as the Gartner hype cycle. And in my 51 years of working life, I have to say, I have never come across a subject that has generated so much hype as blockchain. And disappointingly, in my view, it has become something of a distraction, since the debate should not really revolve around the technology, but around the business itself. And what are we setting out to achieve? And technology, whether it be blockchain or anything else, is never more than an enabler. We should not forget that. So here we see the typical cycle, the hype cycle, as it's called, moving left to right from the so-called peak of inflated expectations, eventually falling into the trough of disillusionment, which I imagine is where we are now. In the past year or so, we have regrettably seen the successive high-profile failure of various platform initiatives, including We.Trade, Marco Polo, Sarai, TradeLens, and a rather lower profile announcement from one of the leading fintechs, Melita, that it would no longer be reliant on blockchain. So the concerns here, just briefly, the concerns here include not only the lack of interoperability, but also the lack of scalability, also relatively high operating costs, and I think increasingly in an environmentally conscious world, a perception that this technology is not environmentally friendly. So I won't dwell on the subject any longer. I think some will argue that blockchain will have a material impact on trade finance one day. I'm someone who would say never, but I don't think I'm going to see it in my lifetime. Briefly here, the fintech ecosystem. These days, we are seeing a proliferation of fintech startups, essentially, offering a range of services from fraud prevention to compliance checks, from ESG to track and trace, from risk distribution to paperless trade. And the power of this digital marketplace can be leveraged through the use of open APIs. So I believe we do live in a partnership world, a collaborative world. It's important to be in a position to take advantage of strategically driven collaboration in order to obtain a best-in-class solution. Okay, so we've spoken a lot about technology. In my experience, however, we cannot get far with technology alone unless it is supported by the right regulatory framework and a set of standards to support interoperability. And again, throughout my working life, I have never before witnessed such an intense desire to create the right rules and the right standards to support the process of digitalization, sustainability, and paperless trade. I can see some real momentum gathering here now for the first time that I can recall, some real momentum. So the ICC itself, of course, has been very active in publishing a new set of rules for digital trade transactions, as well as setting up the Digital Trade Standards Initiative and encouraging widespread adoption of the UNCITRAL model law on electronic transferable records, the so-called Melita, M-L-E-T-R. In the interest of time, I'm not going to run through all of these other initiatives, and there are probably others I've missed. But as I say, a whole host of things happening here to create a regulatory environment that will underpin the successful implementation of digital technology. And just one specific call out here. I mentioned Melita just now, M-L-E-T-R. This is of critical importance since it is designed to support the notion of possession in a wholly electronic environment. And as you may know, a number of countries have already moved to adopt Melita. Others are in the process of doing so. And even as we speak, there is an electronic trade documents bill going through the UK Houses of Parliament, which, when adopted, which will be in May or June of this year, within the next couple of months, when adopted, will, as it says on the slide, I think be a real game-changing moment for world trade, given that a number of jurisdictions worldwide do continue to operate under English law. So I think that is a very significant development. Okay, so just briefly in closing, I wanted to refer to the evolution of the market in trade finance software, which began more than 40 years ago and has been evolving in approximately, I would say, 20-year waves. So beginning way back in the sort of late 70s, early 80s, with monolithic systems that ran on mainframe computers and were deployed in the back office only. And then we hit an inflection point around about the time of the millennium, which brought about the advent of new technology with alternative vendors introducing a front-end corporate channel, which is a real game-changing moment, because suddenly you moved from back office processing only to having a front-to-back system. And then systems to support global processing models and implementing software development kits, which made it a lot easier to do individual configurations. So I do believe that some 20 years later, here we are now, we have actually reached the next inflection point in the evolution of these technologies, whereby those old monolithic applications are no longer fit for purpose, and where banks do need to invest in modern microservices architectures, which are designed to support the consumption of digital technologies and deliver all of the required business benefits, from digitalization to data analytics, from sustainability to supply chain finance, from regulation to risk distribution, and from APIs to artificial intelligence. This last slide of mine really is just a transitional one. As I understand, the second half of the session will be dedicated to the subject of e-commerce. So that's moving more into the sort of B2C world, and is something that I do understand plays an important role in the Kenyan economy. Perhaps just to finish off, I will make some sort of general observations that in terms of the global economy has demonstrated remarkable resilience over the last couple of years. In the face of economic uncertainty, in the face of trade wars, in the face of a global pandemic, more recently in the face of the conflict in Ukraine. I think global trade recorded a record level of $28.5 trillion in 2021, and is forecast to go to $32 trillion in 2022. So I think there is a remarkable resilience about the global economy, and Kenya itself, I think, mirrors that. The Kenyan economy has also demonstrated remarkable resilience, significant political and economic reforms, of course, and there are still challenges. There are challenges everywhere, challenges around inequality, challenges around youth unemployment, and so forth. But I think the outlook is very positive, and I think, to finish on a high note, hopefully, I think Vision 2030. The strategy there is certainly designed to accelerate sustainable growth. So ending there on a positive note, and I am actually looking forward to coming back and visiting Kenya in June of this year, in a couple of months' time. So hopefully be able to catch up with a few of you at that time. But there, I'll close it, and I'll hand back to Mary. Thank you very much for your attention.
Thank you so much, David, for that conversation. I think one key thing for me, my takeout, is on the operational risk, and the track and trace.
Yeah.
One for us is very key to definitely reduce cost for us, the cost we incur with collateral managers, the insurance costs for all the trade transactions that we take on. So you're all welcome for your questions. Can we see anyone on the chat with any question? You can raise your hand. We're having a conversation. Any question from the audience? I can't see any. Okay, I'm told there's a question on the chat. Okay, I'm seeing it's from Emma Wanjiru.
Yeah. I think, yes, I mean, it's a good question. We do, unfortunately, we live in a world that is actually very resistant to change. And I've tried to highlight the advantages of the adoption of new technology, but there is still some resistance in the market. There are legacy systems that are very deeply entrenched and quite difficult to dislodge. So that is certainly a challenge that, the financial community needs to address these issues and needs to be willing to adapt and modernize its architecture, as I mentioned, to embrace these new technologies, which you simply cannot do with monolithic systems. So there are challenges in terms of not the existence of the technology, but the adoption and the uptake and implementation of those technologies, coupled with, as I mentioned, the legal environment. We've got a few countries that have adopted Melita, but we need to see a lot more countries putting that into practice. So, what I mentioned in the presentation, I think it's a combination of technology plus the regulatory environment plus the standards. If we can get all those three things working in tandem, that's how we address and overcome these issues.
Thank you, David, for that. And I think also the governments will have a key role to play Again, in trade, we normally have to rely on a lot of documentations, especially working with the government agencies. So also bringing them to the table, the political willingness to bring this to life will also be very, very critical.
Absolutely, yeah.
One more question before I release David. I think, David, you are clear. I can see one more.
Someone's raised a hand. Emma has raised a hand.
Yes.
At the 11th hour. Hello, Emma.
You can unmute yourself and go ahead.
Okay. I think mine is more of a comment.
Okay.
And what I tend to think is that the acceptance of just I think the acceptance of new technology shall be dependent on the perceived benefits versus the cost of the new technology.
Yes.
And especially where there are, there are legacy processes and all that, which people trust and they work, and so they may not see. I mean, they are not broken, so why fix them? So that's what I tend to think.
I don't know if do you work for a bank, Emma, or are you? The recording has stopped. Okay. Do you work for a bank, Emma, or are you speaking from the corporate community? Or what are you? You're on mute, Emma. Okay, I think Emma's gone on mute. I'll just respond to that question briefly, or that comment. I mean, I deal primarily with the bank.
I've been unmuted now. I've been unmuted. I couldn't. Okay.
Yeah.
No, I don't work for a bank.
No. Okay.
I actually deal a lot with customs and all that because I do logistics.
All right.
So yeah.
Yeah. So I mean, I do deal primarily with the banking community, and the sort of solutions that my company brings to market are deployed by the banks. The reality is, for the banks at least, that trade finance is a business that has not really been growing significantly, probably for the last 20 years. I think I mentioned earlier on in the presentation that almost all of the new business coming into the market today is being done on open account, which, where there is a financing requirement, that is serviced by supply chain finance rather than by traditional trade finance. So from that perspective, what motivates the bank to invest in trade finance is more from a cost perspective, to make it more operationally efficient. And that's where you do need new technologies such as artificial intelligence to take the paper out of the process, and therefore make it more efficient, and consequently offer a more efficient service to the end user. And corporates will eventually benefit from that. The supply chain finance market, as I mentioned, is a growing market. It's a burgeoning market. And the motivation for banks to invest in supply chain is quite the opposite, because there is an opportunity to bring in new revenue. So we're looking at two sort of opposite ends of the spectrum. In trade, from a banking perspective, it has to be about cost containment to make it more operationally efficient and hence more profitable, but at the same time offering a superior level of service to the end user. In the supply chain finance world, it's all about new services, a new market, and a new revenue opportunity.
Okay, so thank you very much, David. We'll still take more questions on the chat, which will circulate for more responses. I would like at this point now to welcome our next speaker, Valerie. Valerie is the head of trade at the International Chamber of Commerce, and she's also the deputy director of the Global Alliance for Trade Facilitation, which is a public-private partnership working to make trade simpler, I think, Emma, for you, this is a person who we need to engage, and from a consumer side of you, to hear from you and others on the call today. She sits in the global headquarters in Paris. She's a trained lawyer, so not only trade, but also she brings the legal conversation into what we try to do at ICC. And she'll be speaking to us today about e-commerce. And I know these are very, very important discussion, especially in this part of the world. And also just to get to understand what are the regulations that they're looking at within this space. So over to you, Valerie.
Thank you so much, Mary, and good afternoon, everyone. It's an absolute pleasure to be here, and I want to also in particular thank ICC Kenya for the invitation to be here, and also for the support that they gave us last week at the World Trade Organization, where one of ICC Kenya's members helped us at an event and spoke so eloquently about the challenges that they're facing in moving goods across the world, and what this would mean if there was if there were to be now similar type challenges on digital transactions. And that's why I'm here today, to just say a few words about the WTO moratorium on customs duties on electronic transmissions, which is quite a mouthful, so I'm just going to refer to it as the moratorium. I'm going to share my screen and try to do this if I can. Okay, give me 1 second. I'm always terrible with the technology, so I'm not seeing it. So if I can't see it, I will. I'm not seeing my presentation coming up. But if not, what we'll do is after the call, I will share it. I'm going to try one more time. Aha, here it is. Okay, here we go. So I think you can now see my screen, hopefully. And I'm trying to put it into presenter mode. What? No. Okay, I'm not sure what's going on. So, there it is. Okay, so you can see it. So yeah, no, I just wanted to say a few words about the e-commerce moratorium. And now I can't move this. I'm going to stop sharing the screen because I'm having just a bit of trouble with it, and it's partly because my tablet has been acting up. So apologies for that. But just to say a few words about what this is and why we're here. So since 1988, at the World Trade Organization, the WTO members have agreed every few years not to impose customs duties on electronic transmissions, and basically, in other words, they've agreed that there shouldn't be a tax on digital transactions. And so every couple of years, or there was a little bit, it took, at the last, they get together and they agree that indeed there's going to be there's been a temporary moratorium on imposing these taxes. And the moratorium is set to lapse at the next WTO ministerial conference, which will happen in February 2024, unless WTO members agree to renew it either temporarily or make it permanent. ICC has long been advocating, of course, for a permanent moratorium. With the growth of digital trade, there's an intensifying debate around the moratorium, and certain WTO member countries have been concerned and are raising questions whether or not is it actually in the interest, in particular, of developing countries for there to be such a moratorium, because what they're looking at is a potential loss in customs revenue. And so there is a discussion. There are certain countries in particular that are have been quite vocal around this. In particular, there has been Indonesia. South Africa has also expressed reservations, and Indonesia has recently attempted to lay the groundwork in their domestic regulations for the imposition of customs duties on electronic transmissions. Before getting into why this is such not a great idea, the first question is what exactly is an electronic transmission? Because and the reality is there's no clear set definition. But from a business perspective, and what is a sort of a globally industry supported definition, is that this includes both the transmission and the transmitted content. In other words, the scope of what this could potentially mean from a business perspective is quite broad, and it would include everything ranging from what digitally delivered cultural goods, sort of books, movies. This is sort of usually what first comes to mind when we think about taxing electronic transmissions, but it also extends to software, to documents that are being sent by email. It could be, for example, it could be a software design. It can be something like a weather app if you're using this for your agricultural business to see what the weather is. It could be emails. The scope is quite large, and so it is very concerning. So why is it that we are concerned, and why has ICC long been advocating, and in fact the rest of the business community saying that it's actually absolutely critical that there's a moratorium on on taxing digital transmissions? First, and first there's the obvious. There's the first is sort of the actual practical application of this, which is extraordinarily and almost virtually impossible to implement. As we know, I know there's there are people in the call who are used to dealing with logistics. We know how difficult it already is to get physical goods across borders, and how much headache and red tape there is around this. Adding a level of complexity where potentially every single digital transaction could be subject to a tax is absolutely, it's a near impossible task. And it would not only strangle companies, it would also place an extraordinary burden on customs administrations as well. And it would be very costly. The other important thing is this would essentially, and from our perspective, be strangling digital trade. It is important that we obviously, digital trade has been a vector of development, and particularly in the developing world. And when we look at what the economic benefits of the moratorium are, because again, a lot of the, there are some governments that are obviously interested in sort of short-term customs revenues. We know that many governments are facing shortfalls in revenues and are constantly looking for ways to raise revenue. But it is quite a short-sighted analysis. At the end of the day, the economic benefits of the moratorium would far outweigh any potential tariff revenue. And this is particularly so, of course, for the developing world. Sort of very basic economics is that, as we know, if there are new tariffs that are being imposed, these will be passed on to consumers. And then, of course, in terms of which businesses are most impacted, it would be the micro and small and medium-sized enterprises who will bear the brunt of this, as they would be disproportionately impacted. And second, what we've seen is that digitally traded goods are absolutely key inputs, which are shown to substantially improve productivity, competitiveness, drive innovation. In other words, in today's modern world, we're reliant on digital transactions to grow to grow and maintain our businesses. So it's an absolutely, and for developing countries, and we saw this recently, through speaking to our members, but who've made the case very eloquently, where they're oftentimes relying even on certain imports for their own businesses. But what's also key is that, as we saw, and as I think David alluded to, is that from the developing world is becoming more and more of an exporter of digital services. So this is not just a burden, sort of in terms of a potential import issue. It would also be hampering potential export growth as well. So I don't want to go on too long about it. I'd be happy to elaborate separately. In terms of what ICC Advocacy and what we've been doing, we had been very active ahead of the last ministerial conference at the WTO, which took place in June 2022. We co-led a global industry statement on the WTO moratorium. It was a statement by businesses and business associations across the world. We are looking to renew this statement and to resubmit it for the next ministerial conference, and we are inviting more signatures, particularly from MSME associations who are really who are, of course, quite concerned with this issue. We are preparing. We prepared issue briefs for negotiators, and of course did a lot of advocacy behind the doors. And now, as we're looking ahead to February 2024, which is coming at a remarkably fast clip. We organized last week, as I alluded to at the start of a webinar with the WTO ECommerce Joint Statement Initiative. And so we brought the voices of micro and small medium enterprises from across the world, including a Kenyan agri-food company who spoke very eloquently. And again, I want to say thank you to ICC Kenya for their support with that event, which was phenomenal. And it was just a wonderful opportunity for the negotiators in the room to hear directly from business and to understand what it actually means to people on the ground when they're, because obviously the discussions oftentimes in Geneva can be quite theoretical, but they have real world impacts. And it was good to remind them of this, that even a new duty, a new tax of just even a couple of cents can make or break investment decisions for small companies. We're preparing with the International Trade Center in Geneva a joint policy brief, which examines this issue through a development perspective, and that's going to be released in the next couple of weeks ahead of the next meeting of the ECommerce Joint Statement Initiative, which is they're having a dedicated session on the moratorium on April 20th. So we want to we will be releasing this policy brief ahead of that meeting. We are working in country on this issue to ensure that governments, so it's not just the discussions, not just in Geneva, but also in capitals. It's very important that that all governments understand what this means and what this would mean for their businesses in their countries. And on that, we are working have been working in country, for example, in a response to the latest development in Indonesia, where they have been sort of testing and trying to see how they could potentially, in the future, impose customs duties. We are looking for case studies and country examples demonstrating the benefits for MSMEs. So, if there are any volunteers on this call who'd like to speak to us, we welcome that. And of course, as I referred to just earlier, we're looking for additional signatories to the global industry statement on the moratorium. Again, this is it's an absolute critical issue. It is one of our key priorities that the WTO moratorium is renewed. Ideally, what we would seek is we want a permanent moratorium because it creates a lot of uncertainty that it, every 2 years, not knowing if whether or not it's going to be renewed. And in the absence of a renewal, it certainly would create it would further fragmentation of the global trading system, and it would have an undoubtedly negative impact on the growth of digital trade and just trade in general, because the digital is now part and parcel of any kind of trade. So I think I'll stop there and hand it back to Mary. But thank you so much for the opportunity to be here. And I'm sorry that I'm not able to share my PowerPoint. I'm not very good with the technology, so that's why I couldn't do the first part of this webinar.
Thank you so much, Valerie, for those insights. I mean, this is something that is very important. And looking at the Kenyan economy specifically, where the business is driven in excess of 70% by SMEs, this is something that could have a very huge impact on this. Now, you've mentioned about signatories, and as a welcome comments and questions on the chat, is the signatories that you're looking at, is it at organizational level? Or is it individual SMEs, or is it at the government level? You've just mentioned that you need signatories to seek in this moratorium extension. So it is good at least to elaborate that for our participants.
No, thank you, Mary. Yeah, so at the moment we're looking for association level or business organization level signatories because they represent the voices of their members. So we certainly encourage anyone on this call to make sure, and to encourage the signatory, that they're part of any, for example, as I mentioned, MSME association. We'd really be keen to connect, and and this is global. So we're looking to really show that the WTO, that this is not just, it's often times when it comes to the digital trade, there's a perception that we're just talking about Google and Microsoft, and that's not what this is about.
Thank you for that clarifications. Comments, questions for Valerie? Either on the chat, you can raise your hand. I don't see any. Valerie, I think you are very, very clear. And members, I think they've taken that feedback. Once again, I would like to thank everybody for attending today's session. We'll definitely have many more of this. If you want to have further engagements with our speakers today, or if you want more on the topics that they've covered today, your comments and opinions are very much welcome. I want just to share something again for the with the members present today, just to speak a little more about ICC and some of the courses that we are running or we've been running. Currently, we have about 10 of them that are running. The first one is on Incoterms 2020. It's a certificate. And this one is going at $301. Actually, all the courses for ICC, we've managed to get a 30% discount. If you're a member, you can be able to enjoy from these benefits. And Leod and Shane and Pascalina will share their contacts on the charts, so at least you can be able to register on this. So the courses that are running between now and June is Incoterms 2020 is a certificate, certificate in digital trade strategy, certificate in trade finance for professional. Also, that one is running between now and the end of June. The first one I mentioned is going for $301. The second one is going for $349, and the professional course is going for $1,049. Between July and September, we have digital trade, finance, and fintechs. We have export finance that also will be running, and these two courses are going for $140 each. This is discounted to members. Again, October to December, we have one more course that is running in global trade certificate, and this one will be going for $769. So we really, really welcome members and other participants to engage with the Secretariat. If you're interested in any of these courses and enjoy the discount that we've managed to negotiate for Kenya. Once again, like I said, once you qualify and pass these exams, you're recognized as an alumni within the ICC portal. Leon has put the details on the screen. Please take those details. You can either do it by email or you can call them directly. So once again, thank you very much for attending the webinar and have a lovely afternoon. Thank you very much.